And welcome everyone to come to our little seminar with such short notice. We've literally there's no 声音. You can't really hear us?
Yes, can you hear us? Yeah, okay.
If you can't hear, just put your hand up. Okay, I'll speak louder. Can't hear? No? Be soft, okay.
Should be on.
It is on, but sorry. Better? A little bit? I'll shout. Welcome everyone to our little seminar with such short notice, because we literally just come up with this idea 2 weeks ago, and we thought it would be brilliant to organize something like this whilst INE Shanghai Futures Exchange is here with us, and we have such loads of new development in the Chinese derivatives market. We thought, as a bridge to bring China together with the Western investors, we would like to host this event. I'm very lucky that we've managed to have China Construction Bank to provide this beautiful venue, convenience as well, and we have some really good speakers to introduce everything that you might want to know. This is a trial. What we're thinking is the Chinese derivatives market has developed so much in the last few years. Loads of new products available for international investors and loads of cross-border trading interest that we can see. But how to have access to them? It's like a cloud over there. People want to get through the cloud, but how do I do it? Where is the access? Who should I go for? Where are the ways to have access? Who provide the platforms? Custodian bank, is my money safe? Is my position safe with anyone at all? So loads of questions I've seen from investors. And I think this is an opportunity for people from different aspects, the chain of trading, cross-border trading, to come to discuss, to introduce these options to you. But this is I'm not saying this is not a manual to enter into China. It's an introduction. There'll be a lot more detail. If you ever had interest, a lot more detail will be provided by broker, by traders later, who will do the last trading techniques and mechanism and information, by our banks as well. So I hope you do enjoy, and let's welcome the first speaker. Wow, Deputy General Manager of China Construction Bank, Mr. Xu, to have a little introduction of the bank over here. Thank you.
Thank you, Ms. Yan. So as the Deputy General Manager of CCB London branch, it's my great pleasure to welcome you all to come to office, attending this China Derivatives Market Outlook 2023 event. So during the past economic and financial dialogue, named EFD, between China and the UK, CCB acted as co-chairs for both Financial Service Summit and actively promote two-way investment connection. We were one of the first banks that participate in the launch of Shanghai London Stock Connect and providing foreign exchange and clearing services to the 5 Chinese listings in London through cooperation with relevant brokers. The bank also has extensive experience in serving foreign investors into Chinese market, including investment channels, custodian services, and even wider cooperation in China market. So we are the largest and the fastest growing Chinese QFII custodians in both AUC and the client base in the past 5 years. So looking forward, I have the faith that the connectivity and the collaboration between UK and the China capital market will deepen. I fully believe that today's event will bring you more informative information, insightful information, and promote further collaboration. With further ado, I will now pass over to our first speaker, Ms. Jing Xia, to kick off the seminar. Thank you.
Thank you very much for the kind introduction. It's my pleasure today to attend the conference today. And first of all, I'd like to thank Nanhua and CCB for hosting such a wonderful offline event. In the past few years, due to some travel restrictions due to COVID, we didn't have the opportunity to have such a large event with offline face-to-face meetings with different market participants. So today we're very pleased to share with you the latest developments in the opening up of China's futures market by taking Shanghai Futures Exchange as an example. My presentation today will cover 4 aspects. First is a very quick overview of China's futures market in 2022. Second is about the access channels to China market. And third is the opening up progress of QFII and INE. And fourth is the next steps we're going to take as we move forward. Back in 2022, we would say that the year 2022 was not an easy year for most of the global markets. The same is true for the Chinese market. In 2022, the cumulative trading volume and turnover of China's futures market reached 6.77 billion lots and 534.9 trillion RMB, respectively, which is equivalent to 78 trillion US dollars, down by 9.93% and 7.96% year on year. But in contrast, the international products in China's futures market recorded very good growth momentum. We'd like to take Shanghai International Energy Exchange, INE, for example. Here, I'd like to explain that INE is actually a subsidiary and international platform of Shanghai Futures Exchange, QFII. As you can see from the figures, in 2022, the cumulative trading volume and turnover of INE increased by almost 60% and 87% year on year, making it the only commodity exchange in China that have recorded double-digit growth. And according to FIA, the trading volume globally in derivatives is still dominated by the Asia-Pacific region, especially China. And the trading volume in the Asia-Pacific region accounts for nearly 60% of the world's total. And here comes the first question. Where are we among global exchanges? As you can see from this slide, by the trading volume of exchange-traded commodity derivatives back in 2022, according to the statistics of the FIA, the top 10 commodity futures exchanges are as follows. And Shanghai Futures Exchange ranked number 3 among this ranking. And actually, all the top 3 commodity futures exchanges are from China, including Zhengzhou, Dalian, and Shanghai Futures Exchange. In terms of the performance of the contracts, actually, industrial metals are one of QFII's advantages. As you can see, 8 out of the 15 industrial metals contracts are from QFII, including rebar futures. This is probably the world's most liquid, physically delivered rebar futures contract. And we also have hot rolled coil futures, aluminum futures, zinc, nickel futures, copper futures, as well as stainless steel and tin futures. In terms of energy contracts by trading volume, QFII's fuel oil futures, bitumen futures, and INE's crude oil futures and low sulfur fuel oil futures are also among the top 15 contracts listed, evaluated by trading volume. And in particular, INE's crude oil futures and low sulfur fuel oil futures had a very good performance last year. Their volume increased by 26% and 120% respectively last year in terms of trading volume. And speaking of agricultural contracts, as you can see from this slide, all the top 10 contracts by volume are from Chinese exchanges, and QFII's wood pulp futures and natural rubber futures ranked number 9 and number 10 respectively. And this slide shows the product lines of futures exchanges in China. Currently, there are 107 products listed on China's futures market, including 74 futures and 33 options. Among them, 23 are specified domestic products, which are also known as international products, including 14 futures and 9 options. And in this slide, they are underlined with an asterisk. And for our exchange, we have 5 international products, and all of them are listed on INE, as I mentioned previously, including crude oil futures, bonded copper futures, low sulfur fuel oil futures, and TS20 futures, as well as crude oil options. And the crude oil futures is actually China's first international product open to overseas investors back in 2018. And apart from that, we also have another access channel that is qualified foreign investors. Last year, starting from September last year, all the futures exchanges in China opened 46 products to qualify foreign investors. And in this slide, they are tagged in blue. As you can see, they include 26 futures and 20 options. For our exchange, we opened 16 products to qualify foreign investors, including 11 products on SHFE, such as steel rebar, hot rolled coil, copper, gold, silver, aluminum, zinc futures, as well as gold, copper, aluminum, and zinc options. And all the INE products are open to QFII as well. So altogether, it's 11 plus 5. Think about that. Just 1 year ago, last year at this time, we only have 9 international products open to overseas investors. But in a year's time, currently, we have 23 international products and 46 products open to QFIIs. So you can see that the Chinese futures market is broadly open, and the trend is very clear and direction is very clear. Once it's determined to open up, more products will be open to overseas investors. The speed can be very rapid as well. Next, let's look at the access channels to China's futures market. But before that, I'd like to share with you the opening up process of SHFE and INE. As mentioned previously, we launched the first international product, crude oil futures, back in 2018. But years before that, we made a lot of preparations because before that, the Chinese market is open to domestic investors. But if we are going to launch an international product, we have to make preparations at different levels in terms of trading policies, clearing policies, and physical delivery policies. So back in 2013, we established an international platform that is INE. And after that, we talked to different market participants and also government authorities, regulators as to how we can design an international contract to welcome those overseas investors. And in 2018, we launched that first product, crude oil futures. In the same year, we also completed overseas registration in overseas markets. For example, we completed the registration in Hong Kong, China, and in Singapore to facilitate the participation of overseas investors in these regions to our market. And it turned out to be very successful. And after that, we launched another 4 international products, including TSR20 rubber futures, low sulfur fuel oil futures, bonded copper futures, etc. And last year, together with SHFE, INE opened 16 products to qualify foreign investors. And last year, that was the first group of products to be open to QFII. And this year, we're also studying the second group to be open to QFII. And in terms of international products, we will also list more. For example, freight index futures. This will be a cash settle product to be listed on INE, and this will also be facing overseas investors. In addition, we are also working on LNG futures and options, but currently we're talking to different market participants in terms of contract design and rule design. We're also talking to the regulators as to how we can make this international product more accessible to the market. These are the 3 major access channels to China's futures market. First is to set up a wholly foreign-owned enterprise, we call that WFI, in China, and participate as a domestic client. In this way, because you are a domestic client, so you can trade all the 107 products listed on Chinese futures exchanges. The second channel is the specified domestic product channel, or we call international product channel. We have altogether 23 products currently. So in this channel, overseas investors can either open accounts through a Chinese FCM, such as Nanhua Futures, or they can also open account through overseas intermediaries, such as Nanhua UK Financial. And these overseas brokers will send the orders to a Chinese FCM and trade on our exchange. For the third channel is the QFII channel. Currently, we have 46 products available for this channel. Overseas investors need to first obtain the QFII license or qualification from the Chinese regulator, the CSRC, and then trade through Chinese futures firms. In recent years, we've seen a growing trend of interest in QFII participation in China's futures market. And this can be seen in this can be reflected in the number of new applicants of QFII in recent years. According to the list of qualified foreign investors released by the CSRC, by the end of April this year, there are 768 qualified foreign investors from 43 countries and regions. Most of them are from Hong Kong, China, the USA, and Singapore. And you know that in November 1st, 2020, the new QFII rule took effect. So starting from that period, we've seen a large number of new applicants. Altogether, 266 new QFII RQFII emerged. Most of them are from Hong Kong, China, Singapore, and the USA. You can also see from the slide, in Q4 of 2020, that was when the new rule took effect. There has been a surging number of newly approved applicants in that quarter. And in 2 years' time, the number of newly approved applicants was almost half of the total number of approved QFII in the past 2 decades. So it shows the market has sent a very positive feedback regarding the new rule, which the new rule said that the QFIIs will be allowed to trade in China's commodity futures market. And actually, now at QFII and INE, we've seen some QFII clients already open accounts and trade at our products, and we expect that the number will going to increase very gradually. Regarding the profile of those QFII clients, we've seen that most QFIIs are financial institutions such as banks, investment firms, funds, asset management firms, securities firms, trusts, and insurance firms. But starting from Q4 late last year, we've also seen new applicants such as industrial clients, clients with physical background, obtaining QFII qualification from the CSRC. So the profiles of those QFII clients are becoming more diversified. And although QFII cannot take part in physical delivery currently, they can apply for hedging quota from exchange. So we guess that those companies that have exposure to the Chinese market, who have trade with China, they want to find more access channels to the Chinese market, and the QFII channel provides another channel for them for risk management. Here is the products on QFII and INE that are open to QFII. Some figures, some basic information. You can see that actually these contracts, the first group of products that we open to QFII are all very liquid contracts, and they all have a very good basis for internationalization. And as mentioned previously, currently this year, we're also studying the second group of products to be open to QFII and RQFII. We're still talking to the regulator. We hope that in the second half of this year, more products will be open to QFII. And here comes the question, having talked so much about the QFII channel and the international product channel, what are the differences between their access channels? As you can see from this slide, on the left is for the domestic clients. Just now I mentioned that one of the access channels would be to set up a WFI in China and participate as a domestic client. So in this way, those domestic clients need to open account through Chinese futures firms, such as Nanhua Futures. And for QFII, according to the current rules and regulations, QFII also need to open account through Chinese futures firms only. But for the international products, their access channels might be a bit more flexible. For example, for an overseas client, they can either open account through a Chinese futures firms and then trade on INE. They can also approach the overseas intermediaries. We call them OIs. Overseas, they are actually overseas brokers registered with INE. They can open accounts with overseas intermediaries, and those overseas intermediaries will send their orders to the Chinese futures brokers and then trade on our exchange. The overseas intermediaries can also send the orders to overseas special brokerage participants, OSBP. They are just like our overseas trading members, quite similar to our trading members overseas. This slide tells more about the differences between these two channels. As you can see, in terms of the participants under the QFII channel are overseas entities with QFII RQFII qualification, but under the specified product channel, the participants are broader in scope. They can either be overseas individuals or general and special corporate clients. And in terms of qualification, clients under the QFII channel need to first obtain the qualification approval from the Chinese regulator, the CSRC. But under the specified product channel, there's no need for such approval by the CSRC. And in terms of account opening method, as mentioned previously, QFII clients need to open accounts through Chinese futures firms. But under the international product channel, they can either open account through Chinese futures firms or through overseas intermediaries or OSBPs. And in terms of margin currency, QFII can only use RMB as margin. But for the specified product channel, in addition to RMB, clients can also use US dollars as margin. In terms of investment products, the QFII channel has more benefits than the specified product channel because more products will be available under this channel. There are altogether 16 products on our exchange that are open to QFII, but under the specified product channel, only 5 products are available. And in terms of physical delivery, currently QFIIs are not allowed to take part in physical delivery, but under the specified domestic product channel, those who cannot make delivery or accept the invoices required by the exchange cannot participate. But those can make delivery or accept the invoices have already taken part in physical delivery. We've seen very large domestic and overseas and industrial clients already taking part in the physical delivery of our products. Next, let's look at the opening up progress of QFII and INE in the past few years. The INE market is growing very fast. We've seen that the average daily trading volume of all INE products have year-on-year growth since their listings, as you can see from this slide. And we've also seen increasing overseas participation, and the overseas clients are dominated by industrial clients, which is pretty different from our domestic market. And the overseas clients' contribution to trading volume and open interest keeps increasing. These are our overseas brokers around the world. On the onshore market, we have 150 domestic futures firm members, and on the offshore market, we have altogether 79 overseas intermediaries and 3 overseas special participants spanning over 12 countries and regions. For example, in UK, we have 12 overseas intermediaries, and Nanhua Financial UK is one of them. And the other 2 destinations with the largest number of overseas intermediaries are Singapore and Hong Kong. In terms of market participants, currently our overseas investors come from over 20 countries and regions in 6 continents, and their client types are quite diversified. We have not only industrial clients, but also trading houses, financial institutions such as big banks, but also retail investors. And most overseas investors open accounts through overseas intermediaries shown in the previous slide. And we've also seen a very healthy participant structure in some of our products. For example, let's take INE crude oil futures, for example. The institutional investors account for about 50% of the average daily trading volume and over 70% of the average daily open interest. And in terms of overseas participation, we see that overseas traders account for about a quarter of the average daily trading volume and over 30% of the average daily open interest. In some of our products, they're gradually becoming the pricing benchmark for physical trade. For example, Bonnie Copper futures and TSR20 futures, their price has been used as a benchmark in the quotation and settlement of cross-border trades by some industrial clients. And we've also seen that a lot of industrial clients use QFII and INE's futures contracts as part of their hedge financing strategies. And we're glad to see that enterprises use our contracts for risk management. In the past few years, with the opening up of our market, we have also received quite a lot of global recognition. For example, last year, both QFII and INE was awarded Chinese Exchange of the Year by FOW Asia, and INE's crude oil options was awarded Innovation of the Year by Energy Risk Asia. Apart from that, we're actually involved in the global futures industry. We completed the overseas registration in Hong Kong and Singapore, and both QFII and INE are included in ESMA's list of third country venues in the context of opinion on post-trade transparency with a positive list, which all these recognition will facilitate the participation of investors in these regions to our markets. And we are also active participants in the World Federation of Exchanges and the Futures Industry Association. And we are also qualified central counterparty approved by the China Securities Regulatory Commission. And both QFII and INE have established a standard and complete CCP clearing mechanism according to the PFMI requirements of IOSCO. Moving forward, we'd like to list more international products such as freight index futures. Previously, I also mentioned that we're also working on LNG futures and options. But currently, we're still talking to different market participants and the regulator as to how to design the contract and the rules. But the direction is very clear. More international products will be listed on our platform, and we will also list more new products in different sectors and introduce flexible trading tools and reference prices to our market participants. For example, in our crude oil futures, we introduced TAS, trade as settlement orders. And we expect to introduce these reference prices or trading tools to other products this year. And we also released monthly average settlement prices on crude oil futures, TSR20 futures, low sulfur fuel oil futures, etc., in the hope that we can provide more reference prices for the industry. In addition, because now the pandemic has gone and a lot of Chinese companies and Chinese futures exchanges are going out to tell people what's happening on the Chinese market. So we will hold more diversified forms of overseas marketing activities together with our members overseas and their branches overseas. And we will co-organize such kind of overseas marketing events together with them. And in addition, we ourselves will release more English investor education materials because we know that a lot of investors tell us that language issue is one of the biggest obstacles when they accessing the Chinese market. So we think that in this regard, we will have more English investor education materials facing overseas investors so that they can have a better understanding of our markets. In addition, if you have any questions, you can also approach us. These are the official website of QFII and INE, and this is also our contact information. If you have any questions, you're welcome to approach us and ask any questions you want to understand. And on the right corner of this slide is our mailing list. You can also scan to join our mailing list. Subscribers will receive the monthly market data from INE Markets and some events, webinars, etc. So we are quite actually involved to engage with different market participants. Okay, so today, this is a brief introduction from my side. Again, thank you very much for attending today's event, and it's also my pleasure to take this opportunity to give a general introduction on the Chinese futures market. Hope you find today's presentation helpful. Thank you.
Hello, everyone. I'm Mara Wang from Nanhua Futures Company, headquarters in Shanghai. So that's why we are here to present the Chinese market. And it's my pleasure to come here in London to introduce what is happening in Chinese market. And in the next 15 minutes, I would like to show you the key points for the foreign investors, how to participate in the Chinese futures market. At the beginning, I would like to show the big picture, what is happening in the Chinese derivatives market. You can see easily from the first chart, the global derivatives trading volume by the region. The Chinese margin is super high than other regions. And the second one is the global trading volume ranking of the futures and options globally. And on the top 20 agricultural products, the Chinese have 16 out of 20. And in the metals, we have 14 metal products out of 20 in the world. And we have 5 in the energy products out of 20 and 3 in the precious metals out of 20. Then the third one is the Chinese futures market, who is interested about us. This is mainly from the European market and the Chinese, the USA market. A lot of clients, they are already very interested of our market and takes action about that. And also 1/4 of them, they start to heard about us, but not attending yet. But only around 10%, they are not interested of us. So based on this, maybe in the European and the UK market, we can think about where is our competitors is doing and try to think about the Chinese market for the next step. And as Xiajing already mentioned, there are 3 different ways to enter Chinese market. There are QFII and international contracts, and as well the WFII. So here I put different comparisons. For example, like the investors, if they are already very determined in the Chinese market, they will choose to set up a WFII. So WFII is already like a typical Chinese company. You need to obey the law, you need to pay the tax, but you also can enjoy the all range of the Chinese products, which is already mentioned for the 107 products. And for the international contracts, like it's very convenient for all the global investors, but the products are slightly limited. There are 23 products in the market yet. And for the QFII, now it's the most popular topic. In last September, we published 46 products in the QFII channel. Then you can immediately to invest from outside. And here I also list like different fund and bank account and margin analytics. And we can help you to understand more based on the margin tax and introduce you the different bank. For example, CCB is very good custodian bank in China. I think it's already the best Chinese custodian bank regarding to the QFII. They have the largest number for the QFII clients, and also they have very good experience to giving the QFII services in China. So from this trading map, maybe it's more easier to understand like how you can access a different market and through the different ways. So QFII is not only related to the derivatives market, you also can trade like stock, bonds, public funds, and private funds. And here you can see you can play different roles. One is overseas intermediary. Then you can open the account in overseas. Here is overseas investors. You can choose to open the account in overseas intermediary, or you can choose to open account immediately in the Chinese broker such as us, or choose our UK company here. Or if you are already a broker, you can choose to become an overseas intermediary with us to receiving your client to trade the Chinese market. So here we also put the numbers of the products. So for example, like asset management company, they not only trade the derivatives market, so they will choose a QFII because they can have the wider like range for all the products. Here is a detail of all the products in the QFII and international contracts you can invest, and we put all the products here. So usually as what we giving the services to our clients, the asset management company and the trading firms, they only check the products who have the bigger volume, but the industry client, they will care about the specific products. With all the different reasons, we can offer you the market data and also some like customized data based on your needs here with different products. Here is the definition of QFII, and after I will have some slides about the QFII process, etc. But I think this part after the CCB will give the more detailed introduction. So I will just give the brief introduction for this part. If you have more questions, we can talk like in personally about that. This is a skill like regarding to the CCB actually. I just share some information. We talk with our client and what we saw from the client always interest. The first one is the CSRC will give some general requirements of what kind of company can apply for the QFII. Then here is the process amount like 2 to 1 month. You can set up the different process with the CCB. They will give you like step-by-step advice to help you to fill different documents to get the QFII license. Once you already have the QFII license, then there is 4 steps how to enter then exist the market. The first one is always to choose a right partner at the beginning, the custodian bank. Then you will choose your brokers. Then maybe you need a law firm and also tax bureau to understand more about this Chinese market. Then you start to get the application from the CSRC about 10 working days. It's some experience from this part. Then we will start to set up cash accounts. Usually it's also in the same bank who help you to set up the QFII license. And here is the fees and the cost. As a broker, we only will charge for the commission fees, but all the potential clients from Europe, they will ask so what exactly, how much I need to pay in this market. So that's why we do extra work to explain how much you exactly would need to pay in this market. And this page is we always explain to our client. The first part is a custodian fee. So actually, if you found a custodian help you to apply for the QFII, as long as you didn't put the money inside, they will not count for the fees. So when you start to trade, you put the money in Chinese market, then this starts to count for the fees. And from our side as well, you can come to us to ask as many as questions you want, and we will only charge you for the commission fee when you trading with us. And there is also some like other fees, but I will give more detailed information introduction with our CCB after. Nanhua Futures, we have 2 other management company abroad. We have one in Hong Kong, we have one in Singapore. So we have 2 QFII licenses on our hand. So you can choose to apply your QFII by yourself. Also, you can use our QFII to try out in the Chinese market. Of course, we need to do a basic KYC, and we can help you to set up the customer account or even a fund to trade the Chinese market immediately through our Nanhua QFII. Then you can choose in the Singapore market or in the Hong Kong market for that. I mean like a Singapore company or the Hong Kong company to access Chinese market here. People always ask like how long time you will take to open the account. So here we give all the detailed process. While you get the QFII license or use ours, then you will only need less than 2 months to get the trading code and really trading in Chinese market here, as our like previous experience for this part. So here is all about QFII. Then we move to the second one is international contracts. How can you add participate in the Chinese market with the most experienced like channel here? The clients overseas, you can choose overseas intermediary such as our Nanhua UK. So today CEO Nong is also here. We can support ATP, CQG, and Bloomberg may be coming soon here. And you also can choose like our Hong Kong companies, also Singapore company based on the different trading platform you use. And then you will come to the Chinese market through us to trade the different exchange market. And here is some like funding requirements in the recent 5 trading days, and it's easy to access actually. For this, like we put all the detailed information about the products. But as I said before, if you have some interested products, you want to know more about the details and also the historical trading data, so you can come to us and we can offer you for that or talking more details about that. Here I put most active international contract as well, actually because they trade for longest time, as Xiajing mentioned before. In this recent 1 year, we have more and more products to come out, and this is trading for longest time. So that's why like the foreign clients, they have more experience for this products here, and we can give you more information if you are interested for that. And we also put the arbitrage opportunity with the different exchanges here. The same like the QFII process regarding to the international contract, how long time we will take. If you already have all the documents, if we communicate you are already ready, then this is a different working days. We will need to help you to open account. Here we put to be determined because here the document still need to prepare by the clients. So it's based on the client. Except for that, we have all the different days, like 1 day, 3 days, 2 days, 5 days to make it as efficient as we can. Even this one? Yeah, no problem. So we introduced 3 different ways like to enter Chinese market. One is QFII, the international contracts, as well as like WFI. Also, we have some OTC swap channels. For example, like some companies, they want to enter Chinese market, but the products are not in the listed yet. And we also can have this talk with known or like with us to have some customized information here. The foreign clients, they ask a lot about the Chinese different trading rules. Some is slightly different like other market. So that's why we always pay a lot of attention to explain the different risk management rules and also other trading rules. Here I put some like main risk management topic you might need to pay attention with. And no worries for that. When you really trading in the Chinese market, we will give you one-to-one training site with all your traders and help you to understand all the documents and even before all the special like holidays or etc. And when the exchange need to will publish some like announcement, we will inform you as soon as possible as we can. So here is special trading rules different than other market. We put it here. We have all the information. If you need, we can talk like in person to offer you all of this. So Nanhua Futures is very experienced in the international business. So that's why we offer the research support like based on what the foreign clients are interested with, and also we can offer you the exchange market data for free. When you are interested in this market before the trading, you can ask us for this data as well. And we have the investment consulting, also the technical support. I will go detail for that. So IT solution here, I put all the trading networking resources because some clients, they are really care about the high frequency IT support. So that's why they all ask this question before they're trading. So this page will show you, even you are interested with co-location or like general needs a fast trading speed, then we can offer you the different services as you want. Nanhua Futures, we have the first derivatives research institution in China. So we have the longest database like related to the Chinese futures and market, and we will offer our existing client for our data cloud for free. But if you want to ask some like data specialist, especially like not in this database, and we will also have our employee to help you to get it in this market. We are also famous for our asset management service because we have a lot of trading firms. They publish their funds they are interested with Chinese clients. So we will have this process to understand the products more and also your strategy. We will try out with our prop fund to see like how we can work better in our asset management sector, and we can help you to distribute your funds in Chinese market as well. Nanhua commodities index actually is a benchmark in the Chinese commodities market, because a lot of clients, they want to fund commodities index, and the only one they can fund for long time, which is Nanhua commodities index. So we also published it last year in OTC, so you can trade it immediately with us to buy the index in the Chinese market. So you don't need to trade like the products one by one, and you can tell me what kind of category, and we can design for the index also. So here is some like brief introduction about us. And as I mentioned, we have the first research institution, and we are also the first A-shared listed futures company in China. We have the largest number of overseas sub-companies out of China. Here is the global clearing membership we have globally. So for example, if you open an account in Nanhua Futures Financial in UK, you can benefit from all the global clearing services with our all brother companies, and also you have access in the Chinese market. Okay, so this is my introduction. So actually, it's very briefly. If you want to get more information, and please contact us. Thank you.
Hello, everyone. I'd like to introduce you more in detail into how QFII can be applied to your investment, and how I'd like to introduce what CCB can offer you as its custodian service. First, I'm starting from how much securities foreign investors are holding in China. You can see in the graph that the stock holdings and bond holdings by foreign investors has been growing very fast during the past 10 years. And you can see they are holding around 500 billion US dollar in stock, in both stock and bonds. Although compared to the total market size, the ratio is not very high. But if you look at how much foreign investors are holding Japanese bond or Japanese stock, you can see that the ratio will definitely grow in the future. And also the Chinese market is also the largest growing emerging market in the world. Yeah, so the total market size will be growing as well. And if you look at the number of foreign investors in the market, there are over 1,000 investors already, and because of the scope that QFII offer, the more and more investors are choosing QFII as their investment channel. And if you dissect all the QFII investors into different regions, you can see that Britain is quite high on the list. There are over 60 clients already coming from Britain and already obtained a QFII license. And compared to the other channels, including CIBM, which is more on the bond side, and QFLP, which is more on the non-listed company side, QFII is the most versatile channel available now. You can invest in futures, options, stock, bonds, everything. Basically every financial instrument is available. Let's dig first into the scope. We've already covered the derivative. You've already know that QFII can gain you access to commodity futures, but not only commodity futures, but also financial futures, stock exchange, stock index futures, options, FX derivatives. But if you have additional liquidity, you could also invest in funds, public funds, mutual funds, or private funds. And you can also invest in bonds market, including stock exchange bonds or interbank market bonds. Either way, yeah, your additional liquidity can be invested in various markets. And you could also invest part of your investment into stock, yeah, including Shanghai, Shenzhen, and Beijing Stock Exchange are all available. Yes. FX derivatives. I think I think that's a OTC, like one-to-one basis. Yes, yes. And next question is who are the qualified foreign investors? The regulators are asking for three requirements. The first one is the financial status need to be stable and strong. They are basically looking at the net asset and registered capital. However, there is no stated requirement as to how much they need right now. If you have interest, you can reach out to CCB, and CCB will help you to evaluate. And the second requirement is the investment experience. But don't worry, it's only 1 year of investment experience is sufficient for QFII. And many people will also ask, do you have to be a financial institution to be qualified? Actually not. You could be a trading house, you could be an industrial firm. As long as you have investment experience by your own money or capital, you could apply for QFII. The third requirement is that the firm is not under regulatory actions in the last 3 years, which is not hard to qualify. Ooh. The second part will go through how to access QFII. Many people think it takes a long time to register and be qualified for QFII. Actually, it's not very long. It generally takes only 3 to 7 weeks to be registered. Then afterwards, account opening will take another 2 to 4 weeks. And each step you will have CCB's assistance by your side. We could help you with the forms, with how to submit the forms, and with how to open the account, everything. And next part, after the account has been set up, how are you going to transfer your fund from offshore account to onshore account? It's actually very simple. You can either choose to transfer foreign currency or renminbi currency. Both are fine. You just need additional conversion along the way. After your money being transferred to the onshore account, you could choose to invest in futures exchange by using the margin account, and part of it can go to bond market, part of it can go to security account as well. And when we dig deeper into the commodity side, one of the advantage CCB can offer is that we got the license as a margin depository bank, so that we could help you setting up your futures margin account. Therefore, your custodian account will be directly linked to your margin account. However, if you choose a foreign custodian such as HSBC or Citi, because they are not qualified as margin depository account bank. So CCB will help you to set up your futures margin account. And in between, you will need additional account in between. This will take longer for the fund to be transferred between those accounts. That's the key advantage CCB is offering here. And this is how to withdraw your money from your onshore account to offshore account. This is a very frequently asked question. Actually, after 2020, this whole process has been greatly simplified. And you could withdraw anytime you want, and it only takes 1 day to get your principal back. For profit, it takes a little bit longer because you need to commit letter to say that you are going to pay the tax. However, it only takes less than 2 days. And there is no quota limit. You could inject as much money as you want, and you can withdraw as much money as you want at any time. And when the whole QFII account is liquidized, is closed, you need you need to clear your tax issues and audit. But that only happened during the liquidation process. And to answer a very popular question is how much tax is being taxed to the QFII account. Actually, it's very low and favorable to investment. For cash interest and stock interest, it's 10%, and no capital gain tax right now, no bond interest tax right now, so it's very low. And next, I'm going to talk about what CCB can offer. As for qualification, we are the first custodian in China, first bank to offer custodian service, and we get the full license, including the margin depository license, and we are serving more than 5,000 institutions. We get directly linked with all the market infrastructures. And we are also the top one Chinese banks in custodian with over US dollar 2.9 trillion asset under custodian. Now we have 600 plus people in 3 operation centers, mainly in Beijing, Shanghai, Shenzhen. As for QFII service, we have been number 1 in terms of QFII asset under custodian and client number among all Chinese peers for 7 years. And we are serving 150 global clients from 22 countries. And we get all kinds of awards for being leading the industry and innovation. And you can see here in 2020, I think we get the most QFII client among all banks. And 2021 and 2022, we are only like a little bit less than HSBC, but hopefully with the commodity like opening up last year, we hope we can catch up with them. Why CCB is so popular among all the QFII clients? The first thing is we can offer efficient QFII application support. We have people working together with regulators, and we have been with QFII approval for like 15 years, and we help over 100 clients to obtain QFII license. And we have participant in all the drafting of the key policies and market rules, so that it's 100% approval rate after CCB's assessment and review and submission. And we can offer a wide spectrum of services along the custodian life cycle, from the account opening, account management, safekeeping, report, trading, voting, everything. And apart from the #1 custodian, CCB can help with other aspects as well. We are the #1 FX market maker and top trading agent and bond market maker. And we are also one of the top bond underwriters as well. So we can offer FX support with your account when you are transfer your money in and help with your bond investment, everything. Yeah. Thank you very much. Yeah, if you have any questions, please contact me.
Now we're going to have Matt Hong as a trader, a real trader, trading INE products to share his experience. He's remotely doing a presentation on from Hong Kong.
Hello, could you see my screen? Yes. Can you see my screen?
Yes, we can, yeah.
Okay, thank you. Hello, everyone. My name is Matt Huang from Banks Financial, and I'm really honored to be invited to share the topic INE trading mechanism and opportunity here. So what we offer, Banks Financial Limited is a commodity and futures brokers based in Hong Kong, and we offer one account for our client to trade both Chinese markets and Western markets. And we were approved as overseas intermediary, which is OI in 2018, and also become the first operational overseas special brokerage participants, which is OSBP on the INE in 2021. So here's our agenda for today. So first, we will talk about trading mechanism, and secondly, talk about trading opportunities. And lastly, we will do a summary for what we see the bonded copper now and the outlook of bonded copper. Trading mechanism. First thing first, we will introduce a contract overview of coppers in 3 different exchanges. First is LME copper, short for CA, and Shanghai copper, short for CU, and INE copper, short for BC. So what makes bonded copper special is that the contract size. Firstly, is contract size. Compared with LME copper, is 1 lot is 25 tons, but bonded copper is 1 lot 5 tons. And the trading hours for INE copper is the same as Shanghai coppers, have T session and T+1 sessions. And also denominated in renminbi per ton, same as Shanghai copper. And the last trading day will be the 15th days of the delivery months. And lastly, the brands, I will talk about it later. And so how to do the cross-border market access as international clients, they could use one account in Banks Financial and trade LME using our route, and also trade INE using OSBP route to gain access to the bonded copper. Next will be the trading opportunities. But before we enter into opportunities, I want to give a short market background. As Jin have mentioned, the open interest of market of bonded coppers went up a lot. From compared with Q3 2021, it went up fourfold from 10,000 lots to 40,000 lots compared with Q3 2021. And if we compare the ratio, the open interest ratio between INE and Shanghai copper, we could see it rose from 5% last year to 10% this year. So we could see there's a growing interest of the market to hold more bonded coppers as their positions. And next is the trading volume, which is more volatile compared with open interest. But compared with Shanghai's volume, the ratios fluctuated at around 8% to 16%. And if we can see from the chart, there's a hike on Q3 2022. It is due to the market events. At that time, market is really volatile and is worried about how market events will affect overall copper markets. And another interesting point we can see from the chart is that after China reopened this year, we could see the trading volume of bonded coppers pick up really soon and even faster than the Chevy copper. So last thing on market background is the deliverable brands. So compared with Chevy and INE, all the INE brands can be delivered to Chevy, and only Class 2 classes copper couldn't be delivered from Chevy to INE. And if we compare with LME and look into the China brands specifically, actually over 70% of the Chinese brands can be delivered from LME to INE. So next is the arbitrage analysis. First, we will compare INE and LME. As we all know that China is the world's largest importer of copper. As a result, we will consider the case of importing copper from LME to INE. So take July, for example. First, we will convert INE bonded copper from CNH to USD. And the CNH here means the offshore renminbi or offshore yuan. And by using the SGX-UC contract, which is the SGX renminbi contract. So convert BC in CNH terms to USD. And then we use 3M price using the daily MOC closing price of July to 3M spread, convert the 3M price to July. So we use BC, INE BC minus LME CA minus some miscellaneous cost. We will get the INE BC versus LME CA spread, which is short for BC CA spread. And if this spread go positive, it means that the BC now traded at a premium over LME copper. If it's negative, it means that INE bonded coppers trade at discount over LME copper. So if we convert these formulas into chart, we can see by using continuous one contract for both INE and LME, we could see there's a high correlation between BC-CA spread and the bonded premium. And the bonded premium here means the SMM benchmark for premium payable for copper delivered at bonded warehouse in Shanghai. So we could see if BC-CA spread go higher than the bonded premium, it means that the implied future bonded premium is higher than the physical bonded premium. As a trader at this moment, we could sell BC-CA spread to lock in the profits. And next is a more recent update of BC-CA spread for August, September, and October. And we could see compared with the bonded premium, all these three contract spreads trade lower than the bonded premium, which is around 20 to 30 USD per ton. So as a trader, if we see the futures premium will eventually go up to meet the bonded premium, then we could now buy the BC-CA spread to earn the differences between BC-CA spread and the bonded premium. Actually, we see a lot of volume recently for October contract in this week. Next, we can compare the July spread and the August spread to trade the differences between these two spreads. So we can see from the chart here, the August spread now trade at higher than July spread. So as a trader, if we see there's no fundamental change between July and August, it means that we expect eventually the July spread and August will converge. And if we expect that, now we can buy July spread and sell August spread to earn a premium. And there are some distinct advantages of this strategy. First, we don't need to hedge against the natural risk, since you buy one and sell one. Another advantage is that the IM discount on both IE and LME. Also, there are some disadvantages, such as higher transaction fee, since you need to open 4 contracts, and also you need to open these 4 contracts simultaneously, which is hard to be operated by human. So secondly, for arbitrage analysis would be INE versus SHFI. Compared with INE and LME, INE SHFI logistically, it is easier for physical traders to move cover from SHFI to INE or INE to SHFI, since all the warehouse for INE is located in Shanghai, which is really near to SHFI's warehouses. And the main differences compared with INE and SHFI copper is only the VAT charges. So the formula will be SHFI divided by 1 plus VAT minus miscellaneous costs. So we will get the SHFI CU versus INE BC spread, short for CU BC spread. So if this spread is positive, it means now we can import the copper from INE to SHFI with profits. And we see from the chart, actually, it is rare to see this spread go positive. And there's two reasons. Firstly, is that as we previously discussed, it's relatively easier for spot trader to transfer copper from SHFI to INE. So they will act really soon as this spread become profitable. And secondly, is that we know many firms engaging in copper financing, so which means that even now importing copper is unprofitable, they will still import the copper from overseas or even INE to the SHFI. The last thing on arbitrage analysis will be INE calendar spread. Like any other exchanges, traders may open borrows or lending position to express their point of view on the spot market or the futures markets. And for physical traders, there are several costs to be considered. First, the delivery fee, warehouse rent, miscellaneous delivery charges, and the financing costs. And the financing costs play a key role in among all the costs. Financing costs, if we assuming 5% interest, it will be around 250 per ton per month. And combining all four costs will be around 350 per ton renminbi. And we express this in chart form. We could see it somehow prove our calculation is that most of the time during the past year, we could see the calendar spread fluctuated under 350 RMB per ton. The only outlier happens last year. We know it is due to the market liquidity issues. At that time, the calendar spread C1, C2 once go up to 1,000 RMB per ton, as we concern around the counterparty risk. So after we introduce all the arbitrage analysis, now we're gonna use one case study to show how we could trade this spread. So we took INE and LME for example. So we're using the market price on 25th of October last year, and using the formula we introduced on page 11, we could get a spread now at USD 240, around 240 per ton. And at that time, the bonded premium is around USD 160 per ton. So we could get the potential profitable range will be 80 USD per ton. And we combine all the initial margin that requires. It required 2,000 USD per ton. So we use 80 divided by 2,000, we could get 4%. And in 1 month. It looks lucrative, but there are some aspects that we need to consider. First, for physical traders, it is crucial to consider the premium between different warehouses, delivery brands, and the transportation costs. And furthermore, as a growing number of people are using programs to trade, so it becomes more challenging to open position at the desired price. And thirdly, liquidity still need to grow more for bigger market participants to join INE bonding copper. Lastly, the parameters we use in our earlier calculation are based on our analysis. Actual costs may vary for different companies. So summary for summary for today. So what we see for bonded copper now, as we previously introduced, iron bonded copper trading volume is steady at around 10% of the total traded copper volume, while the open interest is growing steadily. Secondly, the mechanism for delivery and warrant pledging is smooth and well developed. And also, there is a significant overlap of deliverable brands between LME, IE, and SHFE. So there's a fundamental correlation between the implied future premium and physical bonded premium. Lastly, the IE LME spread is increasingly getting more interest from the market participants. And also we are receiving more and more requests from the Western potential clients in LME week and also in the LME Asia this week, LME Asia week this year. So what we foresee bonded copper in the future? Actually, we communicated a lot with INE and SHFE exchanges, and also these two exchanges are really welcome the market opinion, opinions from all market participants. And as they are planning to internationalize more products, we expect that the INBC to play an increasingly important role in defining the copper price in Asia. Furthermore, as a market, we are hearing more and more people are using bonded copper as the reference price for their physical business. We expect bonded copper become a more significant pricing benchmark. And thirdly, the BC-CA spread that we previously introduced now is serving as the leading indicators of bonded premium, which means that the trader now could use BC-CA spread to know what is the implied bonded premium for the future periods. And lastly, any discussion about the potential expansion of INE warehouse network. We are really optimistic about this and also the outlook of INE bonded copper contract as it continuously to gain more market recognitions in these regions. And the appendix is for the terms and explanations. And here's all for today. Thank you all for your listening. Thank you very much.
Thank you, Matt. Yeah, we've got some questions to Matt.
Yeah. I just want to ask you, why
you hear, Matt?
you say the FX risk is not there for this arbitrary opportunities? Can you hear?
You perhaps.
Yeah,
Could you elaborate a little bit more regarding the FX risk, which was gone in this spread option, spread trading opportunity?
Okay, a moment. Let me share my slides. So are you referring to the CNH risk here? This slide or?
Yeah, that's the one. Yeah.
Oh, that's the one. Okay. Yes. Okay. So potentially, for a trader, if they want to open this spread, this strategy, they need to buy either. Then, for example, they need to buy LME and sell INE. And LME, as we introduced, LME is denominated in USD term, and INE is denominated in renminbi term per ton. So in actual fact, we need to hedge the renminbi risk for these two contracts denominated in different terms. So if we buy, let's say if we buy LME and sell INE, then we need to buy UC, which is sell renminbi, to hedge the renminbi risk. But if we open the July spread and August spread at the same time, we buy July spread and sell August spread. Potentially, we need to sell UC. We need to sell renminbi on the July 1 and buy renminbi on the August 1. And so, in actual fact, these two will hedge with we're hedging between each others. So that's why I would say that we don't need to hedge against the CNH risk here. If that answer your questions.
Yeah. Okay. Thank you.
Thank you.
Thank you. Anyone else has any questions with regard to anything that we had earlier? Are we allowed to give them all the slide copies? We'll have to discuss with the speakers if they're happy with it. Yeah. Put your request through to one of our email addresses, and we'll make a list of that if anyone's any particular slides. And I hope all of us have found something useful from all these speakers. Any questions you have, just send an email to us. We'll speak to the speakers' slides, questions, and also feedback is so important for us as well, because it shows just like what your focus is, what your concern is. There's also loads of people, 20-something people online listening to us as well. And I'm so glad that we can all make it and to the end as well. So more feedback to us so we can make more useful, more focused seminar like this in future. Thank you very much. Feel free to stand there, continue our networking, bit of food and drink as well. Thank you. Thank you, Matt. Thank you. Bye. Bye.